I'm going to, got it, Google QuickBooks Online Test Drive. So hopefully maybe it'll be the first thing to pop up. We'll see what it is. Test Drive QuickBooks Online. And it's going to show it's a couple different versions to test drive, the advanced version, and then everything else is under this one right here, this top one. Be sure you're choosing a United States version, but you can open this sample company up. It's going to have sample data in it. It's going to have really weird dates. It's going to have all kind of scenarios. So, but this is our sample company that we can play around with. It's called Craig's Design and Landscaping Services. Okay, so before I get into using this sample company that we have here, I want to talk about the different products that we got to choose from. So let me see if I can drag this up here. Which version should you choose? So you got four different versions. You've got Simple Start, Essentials, Plus, and Advanced. These are the prices. The normal prices of Simple Start is $30. And that would be for a one user that can use it one at a time. For Essentials, you could have three different users. That means three different people in your office or anywhere could be logged into the same QuickBooks company at the same time. Then you've got the Plus version, which is for five users. And one of the big things about the difference between the Simple Start, which I have a lot of clients that use the Simple Start, is that in the Essentials, that you can also handle e-commerce and accounts payable. That means that you can enter bills into QuickBooks, and then at some point you can go and pay those bills. Well, that doesn't mean that you can't pay bills all the time in QuickBooks. It's just that you cannot use the accounts payable feature if you're in the Simple Start version. That means that you can enter a bill and say it's due on this date, and enter another bill and it's due on this date. And then on Fridays, you say, well, let's go pay bills. And you would see all the bills that are listed there and exactly all their due dates. So that's real handy for larger companies, accounts, being able to use accounts payable. But if you're a really small company, Simple Start should probably work great for you. And you can have payroll in all of these companies. Now with the Plus version, that's when you really get some more added features like class tracking, and you can do job costing, and you can do inventory, and you can pass expenses back along to your customers. So there's a lot of features that are in the Plus version. We might have some people in this class that are converting from the desktop product into the QuickBooks Online product. If you wanted all the bells and whistles that are in the QuickBooks desktop product, you would have to go all the way up to the Plus version. The big thing is having classes that you could set all these classes up, and then you could run a profit and loss by class report. So you would have to go all the way to the Plus version. Now I have a discount code. I'm a QSP, a QuickBooks Solution Provider under Hector Garcia, who is like the guru of QuickBooks. But I am a QSP under Hector, and so I can offer you a 30% discount for the first year. And so that's why these prices show for the Simple Start, it would be $21 a month, for Essentials 42, plus 63 for the first full year, 12 months. You get 30% off if you use my link. And that link should be in the chat. I'd ask one of my associates, Danny, to place that in the chat. So hopefully you're seeing that. Let me get my chat up and running here. Let's see, where is my chat here? There's my chat. Yes, Danny posted that. Thank you, Danny. And so that will get you 30% off for the full year. So those are our choices, and those are the features. And if you let me see if I could, I don't think I can roll down anymore. But anyway, so now I'm gonna let you go and analyze that. If you have any questions, be sure and pop it in the chat, and I will try to keep an eye on the chat and maybe answer any questions you might have. All right, so I am going to jump back over into the my QuickBooks, if I can find my mouse. Okay, Craig's Design and Landscaping. And so the main things that really drive QuickBooks are under the master gear. So the master gear up at the top right here, this is the master gear. And so the chart of accounts is located under your company, and the products and services are under the list. Now, these are the things that really drive QuickBooks, is your chart of accounts and your products and services. So the way you set up your chart of accounts is the way that your reporting is going to turn out. And so when I'm looking here at the chart of accounts, I see all of these different accounts types. I see some bank accounts. I see accounts receivable, other current assets, fixed assets, accounts payable, credit cards, liabilities, long-term liabilities, and equity. All of those accounts are considered balance sheet accounts. That means when you run a financial report called the balance sheet, it's just going to show you at a particular date exactly where all of these registers sit. And as you see right here, I can see right here at the end of equity, I can view all the registers. And so these registers, and everybody really understands the bank account because that's your bank register. If I open up their bank account, I can see, money coming in and money going out of this register. And that's exactly what all of these registers are. Money flows in them and money flows out of them. Like on the accounts receivable register, that would mean when you create an invoice for your customer, your accounts receivable register is going to go up. But when you receive payment for that invoice, your accounts receivable is going to go down. So these registers are going up and down all the time. It's the same way with accounts payable. In the simple start, you do not have accounts payable. But in essentials and up, you have accounts payable that you can enter a bill and then later on go and pay a bill. And so if you entered a bill, that would mean your register is going to go up. But then when you pay that bill, your register is going to go down. And so there's two financial reports that you're after in QuickBooks. And so down here at below equity, we're going to start seeing your income. It's your income minus your cost of goods sold minus your expenses. And that tells you, did you make money or lose money? So when I'm looking at that, I can have all kind of names, but the account types, do I want to set it up as a cost of goods sold account, or do I want to set it up as an expense account? What you would use to decide, do you want to set it up as a cost of goods sold account, would be these are things that are direct costs to you making the money. So if you had a lamp store, when you sell a lamp, that would be hitting an income account, but you had to go buy some lamps to be able to make the money. So that would be direct costs to you making the money. It would be a direct cost expense, and that's why we call it a cost of goods sold expense as opposed to a normal expense. A normal expense you can see is like advertising. These are things that you've got to pay for whether you make any money or not. You've got to pay rent. You've got to pay payroll. You've got to pay utilities. These are things that you've got to pay whether you make money or not. But cost of goods sold are things that are directly related to you making the income. And the reason that you want it set up like that is so that you could run a financial report. So I'm going to come over here on the left navigation bar, and I'll talk more about the left navigation bar here, but I'm going to come down to reports, And I'm going to show you this is really what you're after. This is the reason you use QuickBooks Online. So I'm going to go to reports. And there in my favorites, I can see my two financial reports that I'm interested in the most is my profit and loss report and my balance sheet report. Now these things are flagged with these green symbols here. If I see any report down here and the rest of the list, I could flag those as green if I would want to put them up here in my favorites. But right now, let's look at a profit and loss report because this is what you're after. So when I run a profit and loss report, it's showing me the business from January the 1st through April the 4th. And I can see my income accounts, and then I can see my cost of goods sold accounts, and then I can see my expense accounts. So the way you set up your chart of accounts is the way this report is going to show. And so you want to set it up the way that it's going to speak to you. Now, when I'm looking at this right here, it's showing me just the total from January to April the 4th. But I could roll up to the top up here, and I've got it for this year to date. And I'm going to say display columns by, and I'm going to say show it to me by months. And then I'm going to run report. So then I can see every month how I'm doing. In the month of January, this is how much income came in. My total income for the month of January was $942. But then in February, it was $4,049, and in March, $42.97. And then for the whole year, it's up to $92.88. All these numbers are adding together to make it $92.88. So that's your total income for the whole year for the business. But then you can analyze each month. And the reason that we have a cost of goods sold account is because I can consider this $405 is direct cost to me making the money up there. So it's almost like a little mini P&L report to see what your gross profit is, because it's your income minus your cost of goods sold. And that says, well, you're left with $38.92. But then you got to take out all your expenses, all your variable expenses that you've got to pay for whether you made any money or not. So when I look in March, I'm at $38.92, and then I look at all my expenses, and my total expenses for March are $25.41, $38.92 minus $25.41. I am profitable $13.50 for the month of March. Now, in January and February, when I roll back up here to January and February, I didn't have any cost of goods sold. So I'm looking at my income account. I didn't have any cost of goods sold, so I'm sitting at 942. I'm sitting at 4049, but then I take out my expenses for February. 4049 minus 1612 leaves me 2436. And then down at the very bottom of your profit and loss report is two more accounts. It's your other income and other expense. And these are just for strange things like interest money that you might earn off a business account. That's not considered business income. It's not appearing at the top of your P&L. It would appear down here at the bottom as an other income account. And this example company we have here, we don't have any examples, but we do have an example of other expenses. And so the other expenses is just taking that 2436 minus the 916 and bringing you on down to 1520. Now there is this number, this bottom number right here, this 1280.21, that ties into the other financial report, which is the balance sheet report. So if I would run a balance sheet report for these very same dates on this very same accounting method, whether you can run cash accounting or accrual accounting. So if I run it on accrual accounting, let me look at that number. So it's 1280.21. if I would go back and say, well, let me go back to my report list and let me run a balance sheet and see how that looks. So a balance sheet, I'm going to roll up here to the top. I got my very same dates. I've got it on the very same accounting method. So that number, that 128021, rolled into the equity part of my balance sheet. So on your balance sheet, remember those were the things that when we were looking at our chart of accounts and I said these have registers. And so this balance sheet report is just showing you where each of these registers stand at a particular date. As of April the 4th, 2024, this is where this register stands, your checking account, your savings account, accounts receivable. It's sitting at 5281. I've created a bunch of invoices and I've received some payments. So these registers go up and down, but just as a point in time, these are where these registers stand. And so then you've got assets. And so these are things that you own. So on this balance sheet formula, it's not something that you really have to give a lot of thought to, but it's the formula is your assets equal your liability plus your equity. Okay. So that number right there, 23,436 is my total assets. That is going to equal my total liabilities and equity. So assets are what you own or have. Liabilities are what you owe. So that's why in accounts payable, if I had entered some bills into my QuickBooks, I've got to pay somebody for these bills. And so that would be considered a liability. And every time I enter a bill, my accounts payable register is going up. But then when I pay that bill, my accounts payable register is going down. If I'm charging things on my credit card, the register's going up, but at some point I'm going to pay my credit card and it's going to come back down. If you're running payroll, you're holding money that you're just holding until it's time to give it to the United States Treasury or to your state office. So that, and then in long-term liabilities, and this would be anything that's over a year that you're going to be paying on, like a mortgage or a vehicle or something, that would be considered a long-term liability. So that was my grand total of all my liabilities. And this is the grand total of all my equity. Equity is personal money, money you've invested in the business or money you maybe have taken away from the business. Your equity section is really going to be a lot different depending on what type of business you've got, whether you're running as a sole proprietor or if you're running as a corporation or a partnership. Your equity section is going to have different naming conventions, but it's all going to work just the same. Your balance sheet and your profit and loss report are going to work the very same thing. All right, so now I want to talk a little bit about the left navigation bar. And this is a really great feature that QuickBooks has came up with recently, where that you can put things on your bookmarks. And I love to put things on my bookmarks. And so I would go to my bookmarks and I wouldn't go crazy on this, but there's something that I'm going to a lot, and that's my bank transactions. So I would want that on my bookmarks. And I would also like to have my chart of accounts because everything is on your chart of accounts. And I would like to have my customers and I would like to have my vendors. Those are the four things that I usually put on my bookmarks. So when I hit save, all four of those things show up right there. And if I wanted chart of accounts to be listed at the top, all I would have to do is hit the pencil. I would choose these six little dots and roll that up to the top and hit save. And so now I can get to my chart of accounts really easily. So if you set your bookmarks up, and now, so I'm going to the chart of accounts a lot. So I'm going to click on chart of accounts. And like anytime I want to look at the register, there's several different ways to get to the register, but you're going to that register a lot, that checking register. So if I went over here under my bookmarks and hit chart of accounts, then I could come over here and view that register. And so I could see money coming in and money going out of this register. Okay, so let me jump back here. Okay, so and bank transactions, that's another big thing that we're going to get more into this of talking about hooking your bank accounts and your checking accounts, your savings accounts, and your credit cards up to QuickBooks Online so that every single day these transactions come rolling into QuickBooks and they're sitting here under this bank transaction area, and it tells me how many transactions are waiting to come into QuickBooks. So coming into my checking account, I've got 25 transactions that are waiting to come in. Right now they're sitting in a holding area, and so I can see them here. And next issues, I think it's like in lesson 3, we're going to talk about how to set up rules, and because what we're doing is we're moving it from this holding area onto the register. So while it's in this holding area, it's not affecting your financial reports. But once it leaves this holding area and it gets onto the register, then it's affecting your financial reports. And there's a little hyperlink over here that says go to bank register. When I click on go to bank register, you'll notice here that nothing has a C and a green symbol down this column right here. But as I would move things in from my bank transactions to my register, I'm going to see C's and symbols. So let me find one that would be good to move. Okay. So it sees a check. What it's saying is like it sees a match out there. It means that that check is in my register. I had done the work. And what I mean by had done the work, I had went to the plus new button and I had wrote that check and it's in the register. When I write that check, when I click on check, I can write this check and pay who I need to pay, whatever vendor I need to pay. Customers pay you, you pay vendors. Any vendor I would want to pay, Bob's Burger Joint, and then I would say, well, which account do you want to pay him from? And these would be my bank accounts. If I had a credit card hooked up into my QuickBooks in the sample company, it would show me the credit card also. But I say the checking account, and then I'm going to choose what expense account that I would want to put this check that I wrote to Bob's Burger Joint in. So we would choose, I can do my drop down and see my whole chart of accounts. And over on the left-hand side, it's going to show me the name of the account. And over on the right-hand side, it's going to tell me the type of account it is. So when you're choosing something to go here, be sure you're looking at both sides, the name of the account and the type of the account, because you might have an account that maybe is considered a balance sheet account and you wouldn't want to choose that. But let's say I just wanted to choose meals. And so it's in alphabetical order. So meals and entertainment. And so then I would say, well, I had spent $25. Okay, it's dated today's date. And basically, I'm just going to hit save and close. And that's putting it in the register. So that check, whenever he cashes that check and it's coming through my bank and it's coming through my bank transactions, it would, if I've already got it in the register, it's going to say, I see a match. And so that's what these are right here, where it's saying, I see a check number 75, and there is a match. And so I'm just going to hit match. Now, the big thing about this is you do not want to just start going down and hitting add, view, match. You want to really understand what you're doing. And if you've done that, if you've made that mistake, it's all fixable. Because when I come up here and when I say match, I'm going to come down here to this check and I'm going to hit match. It does a couple things. One thing it does is this goes down to 24, so it's no longer in my for review column, but it has moved over to my categorized column. And so there it is, right there in my categorized column. If I see that, oh, I put it in the wrong place, it was the wrong thing to do, I could send it back for review. I can hit undo, and that took it out of categorize and moved it back over to for review. So I'm going to go do it again. So here's my check. So I'm going to hit it's now that one match found means that it's already in your register. So I'm going to hit match. Then I'm going to go to my register. There's a couple ways to get to my register. One way is to go to the chart of accounts. This is the easiest way if you're on this screen. Go to bank register. So that $75 has cleared the bank feeds. So that's what you want in your register. You want all C's and green symbols. So if you don't have C's and green symbols, that would mean that the bank feed has not hooked up with what you've got in the register. And that could be for a lot of different reasons. And one of the big reasons is possibly people, when they receive payment, are they getting it in the register the right way? Because you want it to end up in the register the way you took it to the bank. If you receive payment and it's a check and you're doing mobile depositing, taking pictures of that check, then they're going to come individually into the register as one number. But if let's say that you are receiving a lot of payments, so that's one thing that's very important here is when I go to the plus new of doing the work, when I go to receive payment right here. So if I would choose a customer, let's see if I can find Amy's Bird Sanctuary. So when I click on Amy's Bird Sanctuary, I can see that there has been an invoice created for her. And so when I receive payment, this is the very important part right here. Do I deposit it straight into the checking account, or do I run it through this area called undeposited funds? And sometimes in QuickBooks, they'll call it payments to deposit. It's almost safer to always run it through payments to deposit. The only time that you would say, well, hey, it was a check and it was check number 3678, and I'm going to deposit it straight into my check register. The only time you would want to do that would be if you're mobile depositing, or maybe you went to the bank with just that one check. Because if you putting the checks together, you need to drop it into undeposited funds so that you can come back and build a big fat deposit. So that's one of the big things that I see here, because if I drop this check, and let's say that they wanted to pay this $239, because it says open balance of $239. So I'm going to say, well, they paid me $239. It's hooked to that invoice. It's got a check mark over there. Hold on, where's my cursor? There it is. It's got a check mark. It's hooked to that 239. I'm going to drop it into that area on my chart of accounts. It's just a register called undeposited funds. So when I hit save and close, it's sitting in undeposited funds. If I would go back to my chart of accounts and I was looking at my register called undeposited funds, and then if I would view that register, I see that $239 just sitting there in that register. Now I'm ready to move it on to the bank. So you've dropped it in there and you're going to take it to the bank as you took it to the bank. So I'm going to go do the work. I'm going to go to plus new. I find that a lot of people with QuickBooks Online, they really just want to rely on the bank feeds only. But you've got to do the work sometimes. Go do the work and your flow is going to work so much better. So I'm back to my do the work button, and I'm going to say, I need to build a bank deposit. I've got some stuff sitting in undeposited funds, and I need to build a bank deposit. So there's that $239 check, and I have some more payments out here. Now, this is bad that they didn't say, well, what was the payment method? They didn't put the check number or anything. So you would always, when you receive payment, you always want to say, well, how was it paid? Was it paid with cash? Was it paid with check? And this was the check number. You want to have as much detail as you can get. But let's say that when I went to the bank, I grabbed Amy's Bird Sanctuary and Cool Cars. I took both payments. And so I'm going to grab them both. And so the grand total of that is 1914. The grand total for this whole, all three of them, is 2301. But for right now, I'm just wanting to move the 1914 from my desk. That's where my checks are sitting right now. And in QuickBooks, they're sitting in undeposited funds. I'm moving it from my desk to the bank and from undeposited funds into the bank. And so here's my bank deposit, and I'm telling it where I would like to deposit these checks. Which bank? Do I want to put it in my savings bank or my checking bank? We'll say the checking bank. But I want it to show as 191452 because when I get my bank statement, that's what my bank statement's going to show me. It's not going to show me the two numbers. It's going to show me 191452. So when that bank feed happens, I'm looking for 191452. So I'm going to go ahead and hit save and close on this. So I'm moving it out of undeposited funds. So if I just refresh my screen up here, we're going to see that 239 has done gone. It's got an R over here. It has left the register and it has moved all the way over to my operating bank. So I'm going to view that register and we can see there's the 191452. And I can see it says split here. So that means there's more than one payment inside this 191452. I can click on it and edit it and even just maybe even see more detail. It sends me right back to that bank deposit screen. But I hope you understand that we need it sitting in the register the way that it's going to bank feed into QuickBooks the next day. So when it banks feeds into QuickBooks, it's going to say, hey, I see this 103.55. So there it says, we've already done the work. Now this is a payment. So that means that at some point there was an invoice and there was a receive a payment and it was sent to the register. So I'm going to hit match on that. If you see match found, you feel more comfortable about hitting match. Now, when I hit match, remember what happens? When I go to my bank register, I'm going to see C's and green symbols. And so there is the C and the green symbol. So in your register, if you don't have C's and green symbols in your registers now, you need to figure out why you don't. Okay. So so over here under I'm gonna just go to plus new for a little bit. And so this is the normal workflow of working, is that maybe you've done some work and you send an invoice to somebody. And then after you've sent that invoice to them, you're going to come back and receive payment. When you click on receive payment and you put that customer's name, it's going to display all the invoices open for them. And then you can say, well, they sent me a $500 check, and you're going to make sure it's hooked to the appropriate invoice. So when you receive payment, it goes and sits in undeposited funds. Now, some businesses would not do invoices. Maybe they have a retail store and they have a point of sale system. So at the end of the day, they would be doing a sales receipt. A sales receipt is very similar to an invoice, but on a sales receipt, you say how you got paid. So I'm not going to go into real detail since this is an introductory class, but maybe in the intermediate class that's starting on Monday night, Ed will talk about receiving things, sales receipts. I forgot what I was getting ready to say on that. Sorry about that. So sometimes you have to do sales receipts, which is like a daily summary of what happened. So if you've got at the end of the day, you've got a POS system that's splitting out a report that maybe, so like I have a landscaping company, and so every day we get an end of the day report, and we know how much mulch we sold, how much rocks we sold, how much sand we sold. And so we use items on our sales receipt so that we can track how much mulch, how much rock, how much sand. And so that's where you get into using the products and services. So we're going to talk about that in just a minute. Now, also, so customers, you're either going to get paid by an invoice or get paid by a sales receipt. It is possible that that money that you receive, like square income, maybe you don't even want to use invoices or sales receipts. Maybe you just want to direct it straight to a square income account on your chart of accounts. So every business is different, and so there's a lot of scenarios. And so if I would say find a pro advisor, contact me, find anybody that's a pro advisor that understands QuickBooks, and spend some time with them so that they could show you and advise you of like, this is the best practice, the best way to use it. If I look under vendors, remember, vendors are people that I pay. Am I going to write them a check, or am I going to record it as an expense? Is it just going to get drafted out of my account? That would be an expense. A check is a check. Everything else is an expense usually. So that's different from desktop. In desktop, we always called it a check. But now if it's a debit or a draft, it would be an expense. A check is a check. If you've got the essentials version and you want to use the accounts payable, then you're going to enter a bill, and then at some point you're going to go and pay the bill. Okay, so that would be using the accounts payable system. You can still pay your people. You would still write them a check or record an expense. It's just that if you're using the essentials version, you have the option of when the bill comes in, I can sit down and enter that bill into QuickBooks. And then at some point I could click on pay bills, and I could see all the bills that I have taken the time to enter into QuickBooks, and they're going to also show the due dates. And so like if I wanted to pay this bill right here, this PG&E 8644, then I could schedule that payment there. Since we're not in a live company, it's really hard to demo some of this stuff. All right, so I'm going to get back out of that. And so just under other is where your bank deposit is. Now, if you're just transferring money from two business accounts, from your business operating account over to your business savings account, you could use this transfer option. You can say, I'm going to transfer from my checking account over to my savings account, and I'm going to move $100. And then you can just hit save and close. And that's going to do the work in both registers. If I would go over to my chart of accounts and I would go view that register, my operating account, we're going to see $100 going out. And I don't have to go back to the chart of accounts. Up here are my bank registers. I can say, well, let me jump over to the savings account, and we're going to see $100 coming into that account. So it's just very common sense of just following the money, the process of like where it goes. Now, these things that under the master gear, we're going to go and look at the products and services. These are what you use on your invoices and on your sales receipts. If you're not using invoices and sales receipts, you might not need products and services here. But these are the products and services that are set up. And so they've got to be set up. If you want anything that you want to appear on an invoice or a sales receipt, has to be set up in your products and services. Okay. So let me go here and demo, like I want to set up a new service. or a new item. We'll call it an item, but it's either a product or a service. These two right here have to do with products, and this has to do with the service. And do I want to call this product a non-inventory product or an inventory product? When I used to do a lot of these classes in live person, I would say, how many think they need to track inventory in QuickBooks? And a lot of hands would go up. Most of the time, you do not want to do that. That you would probably be a really large company to do that. Even though you sell things, at the end of the year, you could possibly do a physical inventory count and adjust your books to say, this is how much inventory I have in my building. So most things are going to be set up under non-inventory. If I sold now a while ago, I said the example of mattresses. Now mattresses, maybe I would want to track inventory. That I would want to know how many of these XL 350s I've got in the warehouse. You know, maybe you want to track inventory. But when you get into using inventory, it's a whole nother ball game. It doesn't hit the profit and loss report. It hits the balance sheet report as an inventory asset. If you go buy inventory, it's sitting on the balance sheet as an inventory asset. And QuickBooks knows exactly when you sell that one mattress, how much to move from your inventory asset over to your P&L report as a cost of goods sold account. A lot of people, if you're not tracking inventory, as soon as they went and bought all those mattresses, they would wrote a check and they would have hit their cost of goods sold account immediately. You know, $20,000 cost of goods sold. It hits it. But then at the end of the year, you could say, let's adjust my cost of goods sold. It's not really 20,000. I have about 10,000 in warehouse. So we're going to do an adjusting journal entry and make that adjustment so that on my balance sheet, I see a little bit of inventory, but then I have a cost of goods sold figure. Because you want it to hit the P&L as soon as possible because you want that bottom number to be right. And so you want, because that's what you're paying taxes on, is that bottom number. How much profit or loss did your business take? It's that bottom number of that profit and loss. But I'm going to say right now, I'm going to set up a service. Okay. And let's just call this bookkeeping services. Bookkeeping services. Okay. Now I can set it up under a category. And when I do my drop down here, I can see that they had a category called design, a category called landscaping, category called pest control. But I don't have to use a category, but this is the description, the wording that's going to appear, because I'm going to use this product, this item, I'm going to use it on an invoice. And so I'm going to put bookkeeping services. So this is a very generic writing that you would want to show up. Now, if your bookkeeping services, it was a certain rate, we'll say it's $75 an hour. This is just what's going to pop on the invoice. You can modify that as you want to. You can make it for each customer, you can give them different rates. But the last thing of setting this up is it says the money you make from bookkeeping services, where on the chart of accounts do you want that money to show up? It would definitely be an income account. And so when I do my drop down here, I'm looking at all my income accounts. I'm really looking at my whole chart of accounts. I can get to my whole chart of accounts and I can see a lot of income accounts. This is all the way up to equity, so I don't want to go any higher, but then I have all these income accounts. Let's say I kind of like services, but maybe I want to know how much money I'm making from bookkeeping services as opposed to payroll services. So I want to create a sub account under services. So right here on the fly, I could type in bookkeeping. If it wouldn't try to pick something up, bookkeeping. And then I'm going to hit add bookkeeping. So I'm setting up something new on my chart of accounts. So on your chart of accounts, there's like 14 different types of accounts on your chart of accounts. Okay. So we know the ones that are on the P&L. It's your income minus your cost of goods sold minus your expense. And then at the very bottom, we've got other income and other expense. So those 5 accounts are what show up on your profit and loss report. Everything else shows up on your balance sheet report. Equity up, equity all the way up to the top. It's in alphabetical order, but your bank accounts are first, and then your accounts receivable is next, and then you're going to have your accounts payable and your liabilities and your credit card. So here are all the accounts, but right now I'm wanting to set up another income account. My detailed type, when I do my drop down here, we're just going to say, I'm going to choose the most appropriate. It's not a big deal. On the detailed type, this is some feature that QuickBooks is going to use in the future that's been like a pain in the butt for a long time, but you just find the one that's most appropriate. So service fee income, that sounds the most appropriate. My name of my account is called bookkeeping. It's very descriptive. I don't need to take the time to do this, but I'm going to say it is a sub account of, and if I know it, I could just start typing it. It's a sub account of services. But if I don't know it, I would do my drop down, and I'm looking at the chart of accounts again. That's why you want to get very familiar with your chart of accounts. After all these balance sheet accounts, all the way down to equity, these are your balance sheet accounts. I'm looking for an income account to make bookkeeping a sub account of services. And I'm going to hit save and close. So now it says income count is services : bookkeeping. Bookkeeping is a sub account under services. This is very important. Edit the sales tax. Is this what I'm getting ready to do or what I'm selling? Do I need to collect sales tax, or is it non-taxable? So bookkeeping services is non-taxable. So I'm just going to come down here and say that is non-taxable, and I'm going to hit done. Okay. So I'm going to hit save and close. So I've got bookkeeping services all out there. Now I want to tell you, on this screen right here of all your products and services, you could use your baby gear here, and you could turn on all the income accounts. And so now when I've like SKU, if I'm not using SKU, I could turn that off. And I always want to see as many lines as possible, and maybe I want to make it compact. But I can see here on my master screen the description, the wording that I'm going to use. I've set it up as a type of a service. This is the description that's going to pop on the invoice, and this is the income it's going to hit, and it's taxable. And then I don't have it checked off. I'm sorry, it's the sales rate is $75 an hour, and it's not taxable. There's no check mark right there. So if I come over here and I go to plus new, and let's say I need to create an invoice, and I'm going to say Susie Jones is my customer. I'm going to add new Susie Jones. That is going to be my customer. I can get more information if I need it. Maybe I don't need it. I'm going to hit save. And I'm going to say I sold her what product and service. If I know it, I could just start typing it. Bookkeeping services for $75. It's not taxable. And let's say that it ended up being 2 hours of bookkeeping services. So she owes me $150. So I'm going to either hit save and send or save and close. I'm just going to hit save and close. So now if I go out to my customers, I'm going to see Susie listed out here, Susie Jones. And if I click on Susie Jones, I can see the invoice that I had created for her. invoice number 1038, and I could edit that invoice and pull it up if I needed to add something else to it. Because maybe she needed to buy some product from me. Maybe she needed to buy the desktop product from me. And so I would key that in here, and then I would have to get that set up on my products and services. Okay, so let's check and see. Does anybody have any in the chat? Let me see if I can get the chat turned back on here. I've got a couple people monitoring the chat. I hope people can see that. Okay. So nobody's been asking really any questions, but so let me go back and just show you a do you want to leave without saving? I'm going to hit no, and I'm going to hit save and close. So I want to go back and go run my financial reports. So this is to get you interested to come back, because I hope that you've learned something today. So if you will keep coming back, I guarantee by the 4 weeks that are up, you will know how to use QuickBooks. You can contact me very easily. My email is jeff@qbxaccounting.com. jeff@qbxaccounting.com. If you want to email me, I will be glad to communicate with you if you get hung up on something. But hopefully you will attend all 4 of these sessions. If you think this is so intermediate or so simple that you're ready to move on to the intermediate class, that's going to be happening on Monday. And one question, my POS will export to QuickBooks. Do I have the advanced? Do I have the advanced version? I don't know if you have the advanced version, but if your POS will export to QuickBooks, I would be questionable. Is it exporting right? Is it creating a sales receipt? Is it doing it right? Because a lot of people really advertise that you can import into QuickBooks Online, but then you end up with a bunch of junk. All my experience with it is I would rather do a daily sales receipt, because you can memorize that daily sales receipt, and you can just go change the numbers real quick every day and make sure it gets in right. So just make sure that you're hooked up there right. So I'm just going to go back over here. We only have like 3 minutes, and I'm just going to run a reports, and I'm going to run a P&L report. And so now in my P&L report, I'm going to say, let's see it by months. I'm going to hit run report. And so now under services, bookkeeping, I made $150 in the month of April. So I hope that was educational, and please come back for the next classes. And I think I'm going to turn it back over to Kimberly or Rachel.
Thank you so much, Jeff. I really appreciate you taking this hour, and I hope everybody was able to grab a little bit from it. I can tell you, I've been doing this for 30 years. I've been using QuickBooks since 1996, and Jeff, you actually taught me 2 things that I didn't even know. So thank you. Rachel, I'm going to open it to you because I know that you wanted to discuss with them about the form so that they can get the invitation into the next event.
Okay, thank you, Kim, and thank you, Jeff. So I just put in the link. We're gonna have you fill out a form, a little bit about how you enjoyed the seminar, and then also to register for the next thing. We don't, because we came from Alignable, we don't have everybody's email to email out the new Zoom link. So if you could please fill that out, and we'll get it to you within 24 to 48 hours, probably more like the 24 hours, but just give us some time.
The other thing I wanted to let you know, Jeff, if you have that the PDF of the outline of what the rest of the classes are going to be, we can also include that when we email them the link for the new next class. Oh, you can't hear me. Okay, Rachel, you'll take care of it, I'm sure. Anyways, okay, everybody, I want you to go. If you have any questions, please raise your hand. We'll be more than happy to field them for you. If not, we'll go ahead and let you go. You had a wonderful day. It's exactly 2 o'clock and we kept you right on to the hour. I know, I always go over and I didn't. So everyone, God bless. Have a great day and we'll see you next week. Same time, same bat channel. Bye-bye.